Hello everyone and welcome back to the channel. Today we had the perfect gap fill on the bearish side. So this is a setup that we go and review on a regular basis over and over again. We really beat the dead horse, or we beat it like a dead horse. Something like that. Because it works. It works. And if you see it over and over again, you can really get some trade setups, successful trade setups, and manage your risk really, really well. And then there's also the shorting the breakdown candle, right? So when you see a breakdown candle, you can also short that. And usually you get at least a 1% move, after that breakdown. And then it gives you that guideline of, when you should get out. And typically that's around 0.5% to 1.5% risk normally is what it fits into the framework here. But we know Moderna runs $10, $20, $30 in a day. So I think the risk is around 3%. But it's definitely worth it because it moves. So there's a lot of money to be made. So before we jump in, let's take a look at our guidelines. So our guidelines is number one, institutions. Moderna definitely has institution participating in buying and selling this stock. The deal. So the deal is usually the closing price of the previous day when there's a gap. That's usually where the deal is at. We also have specific numbers that we talk about, and we identify that as the highs and lows of breakup and breakdown candles. That's the deal. We only focus on those prices. We don't get in between. We get in at the deal. If it doesn't hit the deal, we don't get in. We're not interested. We want the best possible outcome. Patterns. Sometimes you have bull flag or continuation patterns, and we talk about those when we see them, and you can use that to trade and risk management. Like I said, 0.5% to 1.5%. Moderna is an exception. 3%. Golden rule to follow. If you want more training and information about the fundamentals, you can join me on Patreon. Remember, this is not financial advice. This is for education and entertainment purposes only. Without further ado, let's jump into the charts, shall we? Here we go. We have MRNA on the docket, and I don't think it did any of the setups that we talked about yesterday, and that's fine, but it did do the fill the gap setup, which we talk about, on a regular basis. So if you're a savvy, risk-oriented trader, you would have took that position because it was a really good setup. I shorted the breakdown candle. That's what I did. So, even sometimes you can be late to the party and still succeed. So let's zoom in here. And what I'm talking about is, when I say the gap, so this is the closing price here, and then this was the opening price. There's a gap here that needed to be filled. And it filled that right away, first thing in the morning, like within maybe the first 5 minutes. Let's flip it, right? The first 5 minutes, we went up, tested, and then from there, we went straight down. Your risk management would have been, right, we're talking about closing 5 minute, 15 minute, 1 hour candle close above 138, and you would have got in here at 136. Like this is the perfect risk management setup. You're risking a few dollars to make $10, $20. This was amazing if you were paying attention, and you had your limit order set up in the system. That's when I would do it, is so I make sure that I would get in here. And I usually do whole or half numbers, so I would have done 436 or 430. Yeah, what is the closing price? Yeah, 436.50 would have been my entry, right? So you got in there most definitely. But what I did today is short just the breakdown candle, and I got my 1%. But as you can see, if we go back to the 15-minute chart, we had so that's 36 to $16. A $16 move today. So you definitely a lot of opportunity here to get your 1%. So it was a $120 day for me today, which is good. Could have pulled a little bit more profit, but that's okay. I shorted it here, after this candle close, and then that would have been my stop. And I got my $4 and I was out. I think I mentioned this in the previous video. If we take a look at areas of support or targets, so the lows of breakup candles, and you can see here we missed it by just maybe $2, $1.50. We missed it. So this would have been a great buying opportunity. So as being a trader, you need to pay attention to these specific areas. And then if you're willing to take the risk, they can be profitable because, you had a $10 move on the other side. I'm a one and done type of trader. I don't like to, buy, sell, buy, sell, buy, sell. That's maybe, in the future as I do more and more self-analysis and willing to take more risk. I might do that. Right now, I'm conservative. I do my one trade and that's it. And then I wait for the next day's setup. So um, this particular scenario is still on the table. It's still on the table. And as I mentioned, we, will probably trade in this range. And the day that we open below, if we ever open below here, or if we open below here or below here, anywhere at this point, the strategy is going to wait for the breakdown candle and we're going to short it. So something like this, right here, we had the breakdown. This is not a textbook breakdown candle, but we were going in the down direction. And then we just continued over and over again. But we're looking for something similar to that, like this type of candle, but it being red would be a lot better. And this is what we're looking for when we open lower. So, and on any low open, we're going to be looking for that setup. Now, be careful. Be careful, because if we open above or on this area, so 415, if we open here, 415, 418, 420, in this area, it's going to be a buy, and I'm going to buy this area and expect it to fill that gap to 423, because that's we're looking at like a $7 move here. That's plenty. And then if we end up closing below this line is where, on a 5-minute, 15-minute candle close, an hour type of thing, I'm going to be looking to close my position, at that point. That would indicate that I'm wrong. But so far, when the price has opened at that line, we've had buying, right? So we had buying here. We have had buying here, buy, right? These have been buying areas. So we're going to keep with that trend. And because ultimately, we have a gap here that needs to be filled. We have a breakdown candle here, this open, that, price may be magnetic to. And after a run up of $40, we're definitely going to consolidate. So, having this whipsaw action is natural, and we might get tighter and tighter. And this is where, we might gap above this and just go. I hate that. That's not a trade setup for me. And then here is we might have gap down and we might drop. So we'll see. If we end up gapping above here, I'm going to wait for that first 15-minute candle close. And then again, I might, once we retrace maybe halfway down, I might initiate a buy. This is an uncomfortable situation for me, this type of setup, so I don't like it that much. But I know if we start falling, we fall fast and hard, so I'm more willing to do it on the bearish side. But this is what we're expecting to see in the next couple of days, is some choppy chop formations. I think it's going to be a little bit difficult to day trade unless we get those two setups. But if we can, make our way and stay above this line all the way until September 13th, there's a good probability that we're going to continue and test this 455. So that's my analysis on Moderna. I don't know if I wanted to show you anything else. Let's take a look at Apple. Sometimes I like Apple. Yeah, so the same scenario here. So I want to show you this over and over again, right? Beating the dead horse. Like it just works. It just works. You wait for the 15-minute breakdown candle. You have it. You have this bear flag and a continuation. So in here you had a $2 move. 200 shares, that's $400 a day, easy in literally 45 minutes. So we were looking at this today, and we wanted to show you that, what we talked about in the last video was if we had an open up here, we had an open and we just sell off, we would wait for some sideways patterns or short it like, a third or halfway up this candle, and then we would see a continuation downwards. But literally that setup just happened. It just opened and went down. We didn't get the gap up. So the pattern was there, just different price levels. Hopefully you learned something. Remember, like, subscribe, comment. I like engaging with you in the comments. We like sharing ideas and things like that. So again, hopefully you learned something. See you tomorrow.